Property prices in the UK are officially falling according to the latest Rightmove house price index, with properties losing an average of £4,150 in November. Hi guys, and welcome back to another video. I hope you're all doing well. Now in this video I'm going to run through the latest data from the Rightmove house price index for November. But before we do get into the video, if you have not done so already, please remember to hit that like button and of course hit the subscribe button. Oh, and be sure to stick around until the end of the video where I'll be giving 2 top tips for how you can cash in on the coming house price crash. Oh, and you're probably wondering, why have you got a coat on inside? Well, it's freezing in the UK and I don't want to put the heating on because I want as much cash as possible to be able to buy a property. And energy is expensive. So let's get into the video. So after a wild few years of roaring house price growth, the UK property market is finally starting to show signs of weakness. According to Rightmove, the average price of new properties hitting the market has dropped by 1.1% this month, bringing the average price of newly listed UK property to £366,999. We have also seen an increase in the number of price reductions. However, this is only slightly up on the pre-pandemic levels now. Because of a slowdown in activity from last year's completely frantic market, more sellers actually appear to be willing to reduce their asking price to agree a quicker sale. So if we look at this in a little bit more detail, in October, 8% of unsold properties on Rightmove were reduced in the month. Interestingly, this is in line with the 7.5% of properties that were reduced in October of 2019. However, something to note is it is double the 4% that we saw in October of 2021 as the market becomes increasingly price sensitive. We also saw that Rightmove has reported some new buyers appear to be holding off while they wait for more financial certainty, and others who were already stretching themselves have now had to pause on purchasing, which isn't necessarily a bad thing in the long term, as let's be honest, stretching yourself financially can cause some pain. So what about buyer demand? Because let's be honest, the property market is a supply and demand business. Well, according to Rightmove, buyer demand is still up by 4% on the more normal market of 2019, but it is down by 20% on October last year. And first-time buyer properties continue to be the sector impacted the most, with year-on-year demand down by 26% in October, and second stepper demand down by 17%, and the top of the ladder is down by 15%. Now, this weakening buyer demand is leading to signs that more existing sellers whose properties are already on the market and unsold are willing to take their agent's recommendations and reduce the prices in order to achieve a quicker sale. And it shouldn't come as a surprise to anyone that increasing interest rates are impacting buyer affordability. But this first graph, which I'm about to pop up on the screen now, really puts just how much of an impact interest rates are having on buyer affordability into perspective. But this first graph, which I'm just about to pop up on the screen now, really puts just how much of an impact they are having into perspective. Now, so you know how this graph was populated. The first time buyer monthly mortgage payment is based on the Bank of England data of the averages for 90% loan to values 2-year fixed mortgages from lenders. And the average asking price of a typical first-time buyer home, which is classed as 2 bedrooms or fewer, using the Rightmove house price index. And finally, for this graph, the equivalent monthly rent is calculated using the same property types, 2 bedrooms or fewer. Now, what is wild to see is the increase in the monthly payment. That is wild. The thing that worries me the most is that a lot of people are already struggling or living paycheck to paycheck. So what kind of an impact is this increase going to have in the longer term if interest rates either continue to rise or just stay where they are, maybe drop by 0.5 to 1%? Only time will tell. And here is a second graph showing the ability to afford a first-time buyer home. This graph is populated based on the average weekly earnings data from the ONS and then multiplied by 4.5 to get the typical maximum that a person can borrow from a lender. Finally, the average asking price of a typical first-time buyer home is then taken from the Rightmove house price index. Now that we are up to date on where the property market is and where property prices are going, how can we cash in on the coming crash? Well, my first top tip is to reduce any debt that you may have. Debt just slows you down, and it not only means that you have less income available for investing, but it will make it harder to leverage money from banks. And my second tip and final tip is to build a cash pile. Whether you keep it in the bank or invested in something like index funds, it doesn't matter too much, as long as you're building up a cash reserve. Having this cash reserve will mean that when property prices do eventually fall, you'll be ready to buy. You won't just be sat there watching prices go down from the sidelines, you'll actually be able to take advantage of the lower prices and build big equity when prices return. Well guys, that is all from me. I really hope you found this video useful. If you did, remember to hit that like button and of course subscribe to the channel for more content on property and investing and all that good stuff. Now, until next time, stay safe